One of my big mistakes was that I waited until I was 20 years old to open my first credit card, and I still have that account open today, and it's got a length of credit history of around 8.5 years, but it could be as much as 11 years if I opened it sooner. Another common mistake that I see a lot of people make here is that they open a credit card that has an annual fee as their very first credit card, and then they're just afraid to close it in the future, so they keep eating the annual fee, and it's probably not worth it anymore. There's plenty of amazing no annual fee starter credit cards, student credit cards, and other credit building cards out there that you should be looking into instead versus one with an annual fee. And I talked more about a few of these options in a previous video about how to climb the credit card ladder, so I'll go ahead and link that video down below if you want to check it out after watching this. And I'll also go ahead and link to a few of my favorite beginner credit cards down below in the description. The other big thing that gets included in the length of credit history factor of your credit score is going to be called age of credit. And this sounds similar to what we just talked about, but the main difference here with this is that with age of credit, the scoring models are going to look at how long all the accounts on your report have been opened. And then what they're going to do is calculate a single age that's the average of all those accounts. Because of this, you're going to have your oldest account battling to increase this average and keep it high as time goes on. But then also with any newer accounts you open, those obviously are going to drag down your average age of credit. For me personally, even though my oldest account is around 8.5 years old, because I'm always just opening new credit cards, my average age of credit is only a little over 3 years old, which is fine. But honestly, that's only going to keep getting better because most of my oldest accounts are no annual fee credit cards that I'm just going to keep open forever. With length of credit history and age of credit, you really just have to be patient and kind of let time do its thing, as this factor impacts your ability to achieve an 800 credit score. But the good news here is that, again, those previous two factors of payment history and amounts owed are going to account for around 65% of your credit score, so those are definitely what you want to focus on the most. Now, that leads me to the fourth thing that I wish I knew sooner about credit scores, and that is going to be to remember to spread out when you open new credit accounts, because not only are those new accounts going to impact your length of credit history, but they're also going to impact another factor called new credit. Now, the new credit factor affects only around 10% of your credit score under FICO scoring models, but for the average person, I think this is probably going to be the credit score factor that you've seen affect your score the most, because it sort of happens immediately and it's pretty easy to understand why. So usually when you apply for maybe a new credit card, that credit card issuer or lender is going to run what's called a hard pull or hard inquiry, which is essentially just them kind of looking at your credit report and then reporting that they've done so. That sort of lets other lenders know that, hey, this person just recently wanted more credit, and then your credit score is going to maybe drop by just a few points to reflect that. And this new credit factor might affect you more if you have a really thin credit profile with a shorter credit history, but honestly, for most people, it's really not that big of a deal for two reasons. First, even though that hard inquiry has a small short-term impact, the impact is going to fade over the course of a year. And then after that, there's really not that much of an impact anymore until eventually that hard inquiry just fades off your credit report entirely after 2 years. Second, there's actually way more long-term positive benefits that you're going to be able to get out of that hard inquiry compared to the small short-term drop in your score. And that's because with that new account, you're now going to have the opportunity to start making more on-time payments every single month. And the new credit limit that you're going to get is going to increase your total available credit, which decreases your overall utilization with all else equal.